Hi, it's Cady Briggs, the Marketing Executive at Integra Financial, and today I'm going to be interviewing one of the directors here at Integra Financial on offset mortgages. If you have any more questions by the end of this video, please feel free to leave a comment, or better yet, reach out to us. And if you like our content, then subscribe to our channel. What are offset mortgages?
Okay, so offset mortgages are mortgages whereby you can use savings that you hold to reduce the interest you pay on your mortgage. So with a traditional mortgage, you borrow, say, £100,000 and you pay that mortgage every single month. So you pay interest on that debt, okay? With an offset mortgage, if say I have £50,000 worth of savings, I can have my mortgage account for £100,000 and then £50,000 that stays in the account with that bank or building society to reduce the interest I pay. So let's say, for example, I had £100,000 mortgage and £100,000 savings, then in effect, I'm paying no interest on my mortgage debt.
Have they been popular in the past?
So in the 18 years that I've been advising, offset mortgages have been incredibly popular in the earlier years, mainly because they provide a huge tax benefit for the cash affluent or income affluent, whereby you could set up an offset account with multiple facilities. Now by that I mean you could have current accounts, savings accounts, and in some cases even ISAs that are used to offset against the mortgage debt to reduce interest. Now any money held in a standardised saving or current account is a taxable source. So by having an offset mortgage means that you can not only offset the savings against the mortgage to reduce your interest, but also they become non-taxable sources of savings as well. So there's a double benefit, which is great if you're a higher rate taxpayer or hold a high volume of cash whereby there are few sort of tax beneficial accounts to hold that money in. So that's when an offset deal can become lucrative.
Why do we not hear about them much today?
So we probably don't hear much about offset mortgages, probably just through lack of education with newer age advisors. Going back in the early years of when I was advising, we had a whole raft of lenders: Barclays, Intelligent Finance, First Direct, Coventry, Accord, and they would all sort of operate in that lending space. As time goes on, because of the complexity with offset mortgage and the paperwork, I feel that it may be a case where lenders have retracted from that, and because there's not many deals around, or as many deals there were before, the educational side of things for newer advisors has probably fallen by the wayside as well. So it's probably a case or a mixture of banks and building societies not offering it as frequent as they used to, but also maybe a case of a lack of sort of education on that from an advising standpoint to then pass that knowledge on to consumers as well.
What features do you get with a typical offset account?
Good question. So typical features with an offset would be a savings account held with that particular company. So for example, a mortgage lender would offer a mortgage account and have a separate savings account. So there's no interest gain on that money, but the money sat in that account reduces the interest they pay on that account. Now some lenders might just be a one account setup, whereby they have one mortgage, one savings account, and the money reduces the interest you pay. Other organisations may offer slightly more complex benefits where they have current account facilities. So for example, if you're a couple or a pair on the mortgage, you can have one current account each, a joint current account, and multiple savings accounts. Now, although all of those accounts work in the same way as one account in that it reduces the interest you pay on the mortgage, the benefit being with current accounts, it's non-taxable, whereas with a standardised account, you get taxed on the account. And if you read the bank statement, it will usually say along the bottom of the account or in a summary section. So that's a benefit. But also you might want to segregate your banking. So a popular reason for multiple accounts would be for children's education. So you might have one savings pot, which would be to put into university funds for your children, another one for Christmas savings, another one for car savings or home improvements or home costs or holiday costs, and etc, etc, etc. So the benefit from the client is they can manage those individual accounts and segregate the money for those particular reasons, and until the point they need those monies, they're all working together to reduce the interest they pay on their mortgage.
How does this benefit the client?
So there's two or maybe three main benefits for the client. Number one is all of their money's in one account. Now that can be a positive or a negative. Now the Financial Services Compensation Scheme will protect the client up to a particular value if they hold a certain value within one account with a financial group. So for example, if the financial group went bust, they'd only protected up to a specific value. Obviously check the FSCS guidelines now for the up-to-date values based on when you're watching this video. So that's number one. So the benefit to the client could be that they have all their money in one pot, so it's easier to manage, only one password, one login, and they can see the money day to day. The second benefit is the amount of interest they save on their mortgage. So we have a lot of clients from old whereby they're not paying any interest on their mortgage at all because they've either offset their full mortgage balance or they are keeping the money in that to offset and then draw back for other purposes later on. So that's a benefit. The third benefit for me is definitely the taxable side of things as well. So any money's held within that account is a non-taxable saving source. Now, unless you're looking at things like premium bonds, which can erode with inflation, or you look at a pot like an ISA or a LISA, which is non-taxable, there's certain limits on how much you can save. Within an offset, you can offset the full mortgage balance, which could be hundreds and hundreds of pounds, hundreds of thousands of pounds. So those are the three key benefits.
Thank you for watching this video. We hope you got something out of it. If you have any more questions that we didn't answer, please feel free to leave a comment. And if you'd like to see our latest content, then please feel free to subscribe to our channel. If you'd like to contact us, then you can use our telephone number 0117 251 0083, or you can contact us via our inquiries email, inquiries@integraf.co.uk.